Hey, I'm Cal Kier, your mortgage chef, and welcome back to my podcast. Before we go any further, will you do me a favor? Hit that subscribe button so you never miss an episode. Thanks for doing that. You can also share with someone you know who will benefit from learning what we're teaching here today. Okay, so let's get into today's topic. In this episode, we're going to be talking about big banks versus mono lenders. Some people would argue that one of the most important pieces when it comes to mortgages is understanding the difference between a big bank and a mono lender. First, let's recap the two terms we mean. Big banks are typically like you think. Big banks like RBC, Scotiabank, TD, CIBC, and so on. But what's a monolender? A monolender is a non-bank institute in most cases that people have heard of. Banks like or lenders like First National, RFA, Equitable, Home Trust, just to name a few. But the real difference between a big bank and a monolender is simple. Big banks have brick and mortar. You see them on the corner. Everyone knows them. They turn the biggest profits, however, and they're always driving revenue. They hold your cash, they have your bank accounts, they issue you a line of credits, credit cards, and they grow your investments. And they do so much more. Ultimately, they know how to maximize their profit based on how much money you give them, or more importantly, how much they convince you to give them. When it comes to monolenders, there are many benefits other than securing a typical lower rate than the big banks would. They can offer more flexibility in your approval, their turnaround time in most cases is much better, and their different prepayment options that are much more flexible, and for sure their penalties are much better should you want to break that mortgage down the road. There are pros and cons to both options, so you really need to think about it and see what's important to you in a lender and what kind of terms you're ready to agree to when it comes time to your purchase. I'm here to also help you. I'm here to help you decide what type of lender is best just for you. Are you still with me? Give this video a thumbs up. Give us a follow so you can be notified when the new episode is released. As I mentioned, going with a monolender allows you to save on penalties should you want to break that mortgage down the road. And more often than not, the interest rate is a little better in some cases. There's more flexibility because you don't always have the same hoops to jump through that you would with a big bank. Now let's talk about penalties. Big banks can get away with charging you higher penalties because they know you're still going to come back to them as a client anyways. They also have certain credibility behind them because they're such large corporations. Monolenders don't have the same luxury because they want to keep you as a client just for your mortgage. So they do such a great job in providing you just a mortgage, which is why they tend to have lower penalties overall anyways. Although there have been negative connotations about monolenders in the past, the truth is they're just as credible as a big bank, and in some cases, even better. I know when I'm slicing and dicing a mortgage just for you, we're doing it for you, your family, your goals, and your dreams. And I'll make sure I take both of those considerations into thinking about it and help you out. My team and I will always review their application on a case by case basis and make sure we find the perfect mortgage just for you. What has your experience been like with big banks versus monolenders? Did you learn something new today? I'd love to hear about it. I'd love to hear what you think. So leave me a comment if you're watching this on YouTube, or connect with me on social media at Your Mortgage Chef, or by email at cal@yourmortgagechef.ca. Let me slice and dice the perfect mortgage just for you with the very best rate and terms just for you.